And basically, guys, this video that I'm making today is all about using a simple strategy that I have, smart money concept, supply and demand, blah blah blah. It doesn't matter if you're an ICT trader, a Forex trader that trades support and resistance, whatever you trade, just watch this. So if you know me, I trade smart money concepts and I have a simple approach to the market. I don't typically spend a lot of time on the charts because I don't like a bunch of stuff on the screen and things like that. And so let me just go over with you guys what I do. So yeah, the first thing I do is, so today's Sunday. On Sundays, I do my market structure where I clear out the charts. And when I do that, I basically will do my actual market structure slash I'm determining the trend. And then I do that based off the news that's actually coming out, because I trade with the news. I'm a news trader, whether if it's before or after the news. So like for today, we have tomorrow we have Euro news at 4 a.m. So for the Euro session, London session, and we have on Monday United States news at 8:30. So at New York session. So we have London and US. So the currencies that I'm looking for the trade basically for tomorrow are going to be any pair with that's in Europe and any pair that's in the US. So right now you're looking at GJ, which is a European / Asian pair, and so I'm trading this for the European side based off the news that's coming out tomorrow, because there's Euro news coming out in UK's and Europe. So yeah, because that's where the British pound is. So what we're gonna do is go to 15-minute, which I'm on, and I'm gonna just zoom all the way out. So what we're doing is zooming all the way out, and I'm gonna go ahead and just go like this. Okay, and the reason why I'm zooming all the way out is because when you zoom all the way out, you can actually see the structure / trend that's relevant versus when you're zoomed all the way in. And we zoom all the way in, but after. Okay, so right now we're looking at GJ zoomed all the way out, and we want to start from right to left. We don't want to look all the way back here in the left. We want to bring most recent price action to the right side, to the left side of our screen like this. And then what we're going to simply do is I'm just going to take this, and I'm actually going to identify my pieces of market structure based off what we have here. So we zoomed all the way out, and we know that the I'm just gonna actually I'll leave that there. So our current high, we need to find our current high and low. So our current range is here. So that white line is on the smaller time frame, but I'm doing the 15-minute. So let's do the 15-minute. And also, here's a tip: when you're trading anything with Japan in it, you can start from the 5-minute time frame, which is what we're about to do, but we're doing the 15-minute for now. So you can use the 5-minute time frame on Japan because Japan is a slower currency, and so it moves slower when you look at the 1 hour and other blah blah. So the structure I have is bearish structure for GJ, and if we go to the 1 hour, we can see that it is in fact bearish, because if we look at the previous trend that we had up here, we're zoomed all the way out, we were bullish, but then what happened? Price broke structure here, right here, because of all this unhealthy price action, which created all these gaps and supply zones that got filled. And so the most significant area that price actually broke structure, BOS, is what I call my break of structure. BOS is when price reverses from a trend. So if the trend like here was going upward, we were in a bullish trend in the past. What changed this, what turned this into a bearish trend, was when we broke that low right there, where I just drew that white line that I'm now turning red. All right, so you see where it says BOS? That is where the trend officially changed. Okay, so we're gonna go to the bottom here, and we're gonna go here, and we're gonna go zoom in. So once price broke the structure, which was all this unhealthy price action that we have in the middle of our screen right here where I'm drawing the arrow, we had all this unhealthy price action and up here, leaving all these gaps behind. So when there's news in the market, and here's why I trade with the news. News creates volatility, because a volatile market actually moves. And a volatile market that isn't volatile and doesn't have much news kind of moves choppy, sideways, consolidative, and it doesn't really move as much. And so I trade volatility, whether it's medium or high impact news, because it makes the market move. And when the market moves, because of that volatility, the market doesn't actually have time to correct or retrace itself like normal, because normally we would see like a correction or a retracement, but since we don't have that, yeah, we're looking to trade it. And that's basically my whole strategy: supply and demand. We sell high and we buy low. So if I'm trading and I'm trying to sell, what determines the fact that I'm selling in the first place is the fact that I identified that structure I showed you guys. And so if you look here where the arrow is pointed to now, at that gap, at that supply zone, you'll notice that that zone itself is actually towards the top part of the range where all these highs are, where you see that those white horizontal lines, which are my pieces of market structure, my highs. And so that means if we're selling high, because we want to sell. When you're selling an asset to make money in the market, you want to sell at a expensive price / premium price, and then when you want to buy at a cheap price / discount price. Hence, where buying the dip comes from, where people say buy the dip. And so right now, all we're doing is we're selling off of this gap. And the reason we're selling off of that gap, we were selling here, would be because of the fact that we had volatile news coming out and we broke structure. Because if we broke structure, which was the structure of the trend was bullish and now it's bearish, that means we're looking for a reversal. And so that gray box would represent the area that we are reversing from, okay, or a correction or pullback. And so you would actually wanted to have entered here when you notice that, and your stop loss would be right here. Take profit. For me, my take profits are always liquidity. So my take profits would be places, retail traders, which put their trades. So places like support resistance, because people trade off there a lot, and there's a lot of liquidity and a lot of orders at those levels in price, at those price levels live. And trend lines are good places to take profit. Double bottoms, double tops are good places to take profit. And so for here, someone were buying, it would probably be buying off of a double top support resistance. But since we don't see any of that here, we're actually going to just target the this order block / demand zone down here at the bottom of the range, which is where you would definitely not want to be selling at, because you always want to sell high so you can get the most of the profit, right? And so now the market moved down and took profit down there at that demand zone. So that's how you would do it. Because today I'm doing market structure for Sunday, and this event has already happened. But yeah, guys, I just wanted to show you guys that little quick example. So yeah, here are the first steps I'm going to draw for you. So the first steps when you're trading are, doesn't matter what strategy you use, identify the trend. So identify your trend / market structure. Okay, once you identify your trend / market structure, step number 2 is you are going to identify you're going to look for POI. That stands for point of interest. So point of interest is basically areas / price levels, because we're looking at a chart, because that's where the areas are. So these are basically areas where you're interested in. And so these areas usually consist of things like supply and demand zones, order blocks, imbalance gaps. These are basically where you want to enter for a trade. POI, that's what it is, or places where you want to expect a reversal from. So that's your 2 options for your POI, point of interest area that you're interested in trading, and you have 2 options to trade that area. You can trade it based off of price coming to your area of interest and seeing it break structure like we saw with that red thing and then entering, what we saw the example before in the video, or you can enter right on that zone depending on if you're confident or not. So that gives you more options. This is why I like the way I trade. So after you look for your POI, do what I just said. Either wait for a rejection candle that comes off of that POI, and the reason why you want a rejection candle is because a lot of times when smart money, the banks, institutions in the Forex market, because that's who controls the market, that's who controls the price the most. That's where all the volatility comes from. So when you see those rejection candles, that's a good sign that you're trading at a precise level that smart money is actively trading on as well. And so that means you're right, probably. And so you want to wait for that rejection candle / reversal candle for confirmation, you can do that. So either do that or trade off the POI. So that's the next step. And so yeah, and so that's the value I want to give out in this video. And remember, when you're doing market structure, here's another note that I'm going to drag to this right next to me under my thing. I'm gonna draw another note, and I'm actually gonna put it under this note. I'm gonna put when you're looking for your trend, when you're looking for trend / market structure, always zoom out and be on full screen. So you want to don't do what I'm doing. See, I'm looking at the charts, not on full screen. Always be on full screen, because that's the key to Forex. Because when you're trading, the money comes from the charts. The money is a byproduct of your skill, which is on the charts, right? So that it's common sense that you would want to focus on the charts, and then the money would follow. So when you're focused on the charts and you're going on full screen, you're maximizing all the focus, so you don't have distractions and all these buttons you see. So it makes you see price action way more clear, because that, like I said, is essentially the point of trading is seeing the charts, because you need that. That's your strategy. And so when you are in full screen, like I just said, you can see all that, and then that's going to help you become more profitable, because you're just focused on the price action. And so yeah, do that. And yeah, guys, this is just some value I wanted to give off for today. I will make another video tomorrow. I make videos every day. And I also want to let you guys know that if you guys want some more in-depth help and you guys are still confused, always message me. You guys can always contact me. And I also, if you guys are interested, if you feel like it and this isn't enough for you and you want more than this, go check out my my ebook. You can literally download my ebook. And yeah, it does cost. I'm letting you know that now. It does cost. It's not a fortune like all you know, I'm not charging you thousands, hundreds of dollars for it. It's not even $50. It's not even $40. It's not even $30. So it's a real cheap ebook, and I made it this way because I wanted you guys not only to be able to see how I trade on a more in-depth mode, but I also put a lot of visuals in there because I'm a visual learner, and I like a lot of visuals inside of my when I'm learning, because it helps me learn stuff better. So I put a lot of pictures of what my trades and what your trades should look like. And there's so much information that's inside that ebook, and it's right in the description. You guys can check it out and tell me what you guys think about that book, actually, because yeah, like I said, it's 49 pages. So it took me a while to formulate and make that ebook. So yeah, guys. So yeah, just check out the ebook.